Good afternoon, sir. Good afternoon, everyone. My apologies for the delay. Malakas pa yung bagyo natin dito. Here we have the monsoon. Oo, sir. Actually, nung last week, we lost power mga around 4 days. And just imagine, sir, malakas yung ano. And it's been raining mga almost 3 weeks na po. Sige po, sir. I will start the recording. Good afternoon, everybody. No?
Recording in progress.
So for today, we are going to tackle on section 3, which is your cost management. Dito sa cost management natin, are you guys ready? Are you guys ready? I hope you are, no? This is 20% of the part 1 of the exam. And it would focus on the classification of your costs, the relationship of your costs. I'm sorry, sir. Are we to wait for some of the students? I noticed na 7 pa lang tayong lahat.
Okay lang po yung iba kasi nalilate talaga or iba pasok.
Okay, sir. Sige.
Anyway, nakalapod naman dito. So, minsan kami nag-iit ng tao ng Sunday para dun sa mga
Okay po. Ayan. So, the major topics would include how we classify your costs, yung ating cost systems like your variable and absorption costing. We will touch a little bit on absorption, on process costing, and other types of your costing methods. Of course, necessarily, you must have a recall of service cost allocation, no? Yung ating mga lateral allocation methods, yung ating reciprocal method, yung ating the use of the high-low method as well as regression analysis. No? But insofar as the use of the FAMA French, yung ganong model, ano lang siya in theory. No? We must only, it only requires for us to know a little description about mga not commonly used na mga costing methods. No? But they might come out, so it would pay to know kahit na yung a little background on them lang. And so, with service cost allocation, we talk about your inventories, no, how the costs would be distributed to your cost of goods manufactured, to your cost of goods sold, no, how you are going to account for spoilage. This is also part of your operational efficiency. And then you have business process performance, which would talk about just in time, yung Kanban, business processes in the manufacturing industry. So hindi lang limited yung ating concepts in terms of business process performance kasi dito rin papasok yung benchmarking, ganun. So marami, depende dun sa industry, depende dun sa priority as well as the focus of the business. So we are going to touch on some. So for the classification of your costs, sinasabi natin na pag ang pinag-usapan natin kasi is cost, it would necessarily involve na i-separate natin ang group of expenses into their different categories and into the right categories. So your classification system is used to bring attention doon sa mga certain costs that are considered to be more crucial than others. So ang ginagawa natin when we classify our cost is actually linked to financial modeling. So dito sa slide na to, it's going to tell you that yes, your costs incur costs throughout the operations and that these costs can be classified, they are specific. So the different terms and the classifications that we will touch on throughout our discussion will be important kasi there are the concepts of which costs would be relevant to us, which costs would be value-adding which costs would not be value adding, and thus we can crunch them. So these terms may be tested directly, either simple definition or indirectly. It could be asked as part of a larger question. But the most important thing is we are able to understand yung basic na concept of what that cost is and how it becomes relevant to you doon sa iyong decision making. Kasi that's the point of being able to identify and classify your costs. Yeah. Cost based on the level of production, we are very familiar with three. You have your fixed cost, your variable cost, and your mixed cost. So we understand na pag sinabi mong fixed cost, these are costs that are independent of volume. So ang ating mga fixed costs, they would tend to be based on time rather than yung quantity of production or quantity of sales. Kasi whether your fixed costs are going to remain the same regardless of production output. And so, if it is fixed, kung hindi siya based sa production at hindi siya based sa sales, then we can say that we cannot avoid fixed cost. And so, your fixed cost, again, will not change or will not vary in regard to production. So, they are indirect, meaning they generally will not apply to the production process, unlike your second type of cost, which is your variable cost. So, common examples of your fixed cost would be lease. Ito nakalagay yung example siya. A common example of your fixed cost would be your rent and your lease cost. Pwede rin maging example mo ang salary, ang utilities, insurance, your loan repayments. In contrast, you have your variable cost that would change based on the amount of production. So your variable cost would tend to change in along the changes in your outputs. So your variable cost would include your labor cost, your commissions, your raw materials. You are going to see this a lot about this discussion, yung term na relevant range. I believe there's a dedicated slide para doon sa description ng relevant range. But when you say a relevant range, this is the range where our assumptions are accepted, where our assumptions are linear. It means this is the range where we can tolerate yung ating mga assumptions. And outside of that relevant range, that's where the relationships of these costs become irrelevant. I mean, not really irrelevant, but they are non-linear. The other type of your cost would be a mixed cost. So if it's mixed, it is comprised of two parts. One would be fixed and the other would be a variable cost component. And so the proportion of each of the components in your mixed cost, in the total cost, may vary, of course, depending again on production volume. So generally, the larger the production volumes, they're going to result in higher proportion of your variable costs, and the other, and vice versa. So examples of fixed cost also could be what we mentioned for the fixed, kasi there is a variable component like your utilities. If you look at your bills, meron siyang fixed, meron din siyang variable based on the consumption. So your management fees also, yung salaries plus if you provide bonuses. So your fixed costs are not purely fixed or variable. So again, it is a combination. So please be reminded that your mixed cost will fluctuate with the production volume. And your mixed costs are costs that cannot be removed from the cost structure like a fixed expense. Ang maganda kasi dito sa pag-identify natin on the basic definition of what your costs are is actually the relationship with each other. Ito yung na-mention natin kanina na isang process costing method, which is actually your activity-based costing. So this slide will actually tell you what is an activity-based what is your cost driver. So it means the same thing. So when we say it's an activity base, it is a measured activity ng una. And if it is a measured activity, ibig sabihin, ginagamit siya to allocate your overhead costs. Like for example, yung iyong units produced, machine hours, common ang labor hours, common ang miles driven. So, sabi natin, di ba, for example, yung number of machine hours used during a reporting period is a reasonable activity, diba, to use as basis in the allocation of machine costs sa iyong production. Or, reasonable din that the number of the labor hours that we consume in the production area is used as basis for the allocation of your indirect labor costs to the units produced. So, if your business, as the operation, or a more complex allocation system will of course employ several activity bases. Now, most of the examples that we've seen, multiple choice questions with at least 2. Meron yung isang problem siguro ang ginamit niyang activity-based 5. But the point being, you are able to identify yung cost per unit. Yun naman ang nagiging twist usually ng problems kapag ang ating tinitignan or the focus is cost driver. So yun na, the units produced, the machine hours, the labor hours, and the miles driven are the costs that are directly related to your operation and thus can be used to allocate your costs. Types of fixed cost, merong dalawa. Yung committed cost at saka yung discretionary cost. Yung committed cost, they are known as capacity cost. Ang capacity cost, these are required to maintain yung current production capacity. Kaya nga siya committed cost. It's long-term. It cannot be significantly reduced in the short term kasi kailangan mo siya to maintain current production capacity. Yung costs mo, yung committed cost mo would normally arise from long-range decisions. And naka-align siya doon sa size as well as nature of the organization. These costs being committed cannot be avoided. It cannot be avoided when your business or when the company would use yung kanyang existing capabilities to produce and sell their products or their services. Kaya nakikita mo dito na ang typical na example ng committed cost would be your depreciation. It would also be yung sweldo ng supervisor mo, your property taxes, yung rent, yung real estate taxes. These are not exhaustive examples. Marami pa tayong example. And then for the other type of your fixed cost, which is your discretionary cost, coming from the term discretionary. So, this could result from decisions made by top management, for example, or this could result from policy decisions made by your managers based on discretion. So, your discretionary cost could also be known as your managed cost or tinatawag din siya sometimes na programmed cost. So, unlike your committed cost, ang discretionary cost would tend to change over time. And so, usually mga isang taon, ganun, your managers would usually set your discretionary costs at a fixed amount year after year. So, for example, you have your expenses for research and development. You have your advertising is one. You could also have employee training programs. You could also have yung ating charitable contributions to civic groups or kahit na any civic groups, any contribution that we make to our communities would be an example of a discretionary cost. The linearity assumption and the relevant range. Ito yung minention natin kanina. You have there two concepts, the economist curvilinear cost function and the accountant's straight line approximation. If you talk about a curvilinear cost, obviously, it's also called a non-linear cost. Bakit? Kasi sabi natin, if it's a curvilinear or a non-linear cost, this is an expense that is going to increase at an inconsistent rate as your production volume would also increase. So, nagbabago siya. Kaya nga sabi natin kanina, mahalaga yung ating relevant range. Kasi sa relevant range, all of our assumptions are accepted. Pero pag lumabas ka doon sa range na to, it is something that the relationship is no longer linear. So, mas mahirap siyang i-interpret. For the accountant's straight line approximation, the one you see from this is the fixed cost sloping. So, if you as a management accountant would apply yung linearity assumption, a cost variable relationship, ang sinasabi natin, there is a relationship between the two variables. Sinasabi natin na linear. So sinasabi rin natin that in a linear relationship, a specific amount of change in one variable would cause a specific amount of change in the other. Like for example, the relationship between the cost of materials and price of a product. So typically linear yun because the changes in the price of your materials would cause a corresponding change in the price of the product. And normally, kapag mas mababa mong nakukuha yung materials, you are able to increase the price of the product. But again, this would depend on the strategy of the business para doon sa kanyang profitability goals. So, when we talk about the linearity assumption, sabi niya ito, a straight line closely approximates a curvilinear variable cost line within a relevant range. So, sa kanyang application, when the relationship between your cost and your certain identified variables is linear, the management accountant is able to develop an equation for calculating future costs. Of course, ang basis niya would be the value of these associated variables. So for example, if labor expenses and the cost of materials affect yung total production cost mo, you would develop an equation to calculate yung production cost based on specific values for the cost of labor and materials. Diba? Logical lang siya eh. So, you can then use this equation para makapag-project ka ng future production cost in different scenarios or when you apply it in sensitive. So, mahalaga yung mahalagang masabi sa atin sa ating problem na mai-encounter that this is within the relevant range para ang iyong interpretation will also be, because if it goes beyond the relevant range, then it would be a little more complex. Fixed cost and the relevant range. So sabi niya, the relevant range of activity pertains to fixed cost as well as variable cost. So for example, you assume this space is available at a rental rate of $30,000 per year in increments of 1,000 square feet. So your fixed cost would increase in a step fashion. At a rate of $30,000 for each additional 1,000 square feet. This talks about the cost behavior within the relevant range. Again, take note, sinasabi niya that it is within the relevant range because outside of it, there might be different relationship. And depende dun sa ibibigay nila sa inyo na information for you to make the assumption. And so, again, we have your cost classification, whether it is variable or fixed. Pag titignan mo in total ang variable cost, the variable total cost would increase and decrease in proportion to your changes in activity level. Pero on a per unit basis, yung variable cost per unit would remain constant. within the relevant range, your fixed cost is not affected. In total, is not affected by any changes in production or levels of output. But if you look at it on a per unit basis, your fixed cost will decrease habang tumataas yung activity level and tumataas yung at bumababa rin siya and increases as the activity level falls. Kasi di ba ang fixed cost is spread mo sa lahat. Whether hindi siya nakabase sa production or sales. Kaya isi-spread mo siya sa mas marami items. So fixed cost per unit would decrease as your activity level rises and increases as the level falls. I hope that you remember itong concept yung relationships within the relevant range. Yan. So we go to your mixed cost. We can and so we describe it as semi-variable and semi-fixed kasi meron na siyang component that would be fixed and then there's another component that would move towards the changes in your output. Yan. Ito yung example niya dito is utility. So papakita niya sa'yo the fixed cost line and then itong portion na to fixed monthly utility charge and then above your fixed cost line that would be your variable cost. Remember na kailangan mong i-cover muna, diba, yung fixed cost. Saan mahalaga to? Yung identification pa ng mixed cost mo sa break-even point analysis, diba? Kasi kailangan mo yung contribution margin. How much do you need to cover yung iyong variable cost para ikaw ay magkaroon ng margin and how much do you need to cover for the fixed cost para ikaw ay magkaroon ng profit. So ganun yung concept niya. Meron siyang part na fixed, meron siyang part na variable. Ayan. So you most probably remember yung concept na to by using the cost line. Y is equal to E plus BX, where your Y would of course be your total mixed cost. Yung A mo would represent yung total na fixed cost or this is the vertical intercept of the line. And B, where this is your variable cost per unit of activity or this is the slope. And you have your X, in this example, this is your kilowatt hours or the level of an analysis of your mixed cost, account analysis, and the engineering approach. So sabi niya, in account analysis, each account is classified either as variable or fixed. Dependent siya doon sa kaalaman mo of how this account would behave. In contrast, the engineering approach would classify your cost based on industrial engineers' evaluation of production and material, labor, and overhead requirements. So magkaiba din yung specialization ng costing na yun. But engineering does have kanilang costing. Yung mga students sa engineering ganun eh. They also have ang common sa kanila is the computation for the depreciation. But they do have costing. Depende naman kasi sa kanila yung materials. Yun naman. Kanilang reporting. Yan. So for fixed costs and the relevant range, please take note, in this example, sabi niya, on your y-axis, you have your rent cost in thousands of dollars and then your x-axis is the rent area per square feet. Remember yung $30,000 kanina and then it increases to $1,000. Yeah? So the fixed cost would appear to be your $30,000. And so the relevant range for an activity for a fixed cost is the range over which your graph of the cost is flat or kung saan ang ina-identify niya na relevant range. So tataas siya kada square feet of 1,000. So mag-i-increase din ang iyong cost habang tumataas yung square feet of rented space. So we know this as y is equal to E plus dx. So yun yung ating usually kinocompute natin dito yung variable cost per unit. Yun ang madalas na tinatanong sa inyong choice. So I hope na wala tayong confusion. sa variables na yun. Yan. This one, for the cost segregation, yung na-mention natin earlier dun sa unang slide, no? You could use two methods. This is your high-low points method and the regression analysis. Ang gusto nating paghiwalayin is your fixed cost and your variable cost. Kasi nga gusto natin that our estimates are accurate and they are based on the proper cost drivers. So, if you say, let's look. Okay. If you say the high-low method and the regression analysis, these are the two main cost estimation methods. And usually, managers would break your mixed cost again into both their fixed or variable components. Kasi nga, we need to predict and plan for the future. Now, for the high-low point method, you take the highest level of activity, less your lowest level of activity, and then you compare the total cost at each level. Diba? If the variable cost is a fixed charge per unit and the fixed cost would remain the same, then it is possible to determine yung fixed and variable cost by solving yung equation. So, sa high-low, gumagamit siya ng small amount of data para ma-separate mo lang yung fixed and variable kasi dalawang points lang naman yun. No, it takes the highest and then the lowest activity levels and then you compare yung kanilang total cost. In comparison, mas complex na yung regression analysis kasi ang tinitingnan mo dito is a relationship between two or more variables. Hindi lang siya dalawang points. Ang isang advantage ng high-low point is the ease of application. Ang isang advantage ng regression is more accurate. Kasi mathematical ang kanyang approach. So, your regression analysis is used to observe changes doon sa dependent variables mo relative doon sa mga pagbabago or changes in the independent variables. Merong dalawang klase ng regression analysis. One would linear regression and the other would be multiple regression. I'm not sure lang kung merong example dito ng multiple, but usually it's linear kasi kailangan mo ng medyo mas mahirap yung application ng multiple regression, but Ayan. The high-low points method, this will simply tell you the steps ng application ng high-low point. So, you calculate the variable cost per unit. You simply divide the difference between the highest and the lowest cost. You divide it by the difference between the highest and the lowest production volume. Then, of course, you multiply yung variable cost per unit by the unit volume at either i-apply mo. Makakompute mo yung variable cost per unit, so i-apply mo siya dun sa either. You either highest or lowest production level to get the total variable cost, and then finally, you could subtract the total variable cost from the total cost at that level of the fixed cost. You can use either equation. Nang isa-substitute mo lang naman ang variable cost per unit. So simple regression analysis can be used to find the fixed cost and the variable cost per unit when you have, number one, an independent variable, number two, a dependent variable. They are within the relevant range para maging consistent na yung relationship ng variables mo. And when you refer to the forecasting section of the textbook for further details regarding regression, I refer to, may textbook pa kayo? May textbook ba kayo? Okay, so hindi na yan diniscuss in detail, no? But ang approach kasi sa regression analysis would be mathematical in nature. I guess the next would be a scatter graph then. Analyze a mixed cost using a scatter graph plot and a high-low method. When you use either of these methods, you can plot the points. No? That's the output. No? That's usually how we are going to present it to those needing yung results of our analysis. So for example, you have here assume the following hours of maintenance work and the total maintenance cost for 6 months. So binigyan kanya ng from January to June, hours of maintenance, and total maintenance cost. So if you look at the total maintenance cost, your highest would be June, which is $9,800 at 850 hours of maintenance, and your lowest cost would be at 7,400 in February for a total hours of 450. So kukunin mo yung kanilang difference. So I guess if we move forward, ayan. Ito kasi, let me go back to the slide. Ginaf niya yung mga points, no? So plot the data points on the graph. Your total cost Y, the dependent variable, and activity X, which is representative of your hours of maintenance, is your independent variable. So saan niya kinuha? Ito siya, X and Y. So plinat lang. They're not, I'm not sure, but I don't think they've ever asked us to plot yung scatter graph based high-low on high-low points. They're probably gonna ask you a lot on regression. So ito siya. If we continue forward, yung computation niya, na-mention natin kanina that the highest point or that the highest cost was in June, right? It was 9,800. And the lowest cost was in February at 7,400. You have a difference of 2,400 in maintenance cost. Now, for those months, ang appropriate na hours niya or the corresponding hours for June was 850 and 450 in February respectively. Ang change niya ay 400. So for you to be able the variable cost per hour, that would be 2,400 divided by 400. So ibig sabihin, the variable cost per hour is $6. Okay pa tayo, no? Okay pa. So finally, you're able to determine yung variable cost mo. So it's $6. Ayan. So ang gagawin natin, i-apply natin siya. Sabi niya kasi, we can calculate now for your fixed cost. So you can apply it to either the high or the low point ng iyong given. So for this example, you opted to apply it to the high cost. So for your total fixed cost is equivalent to the total cost of 9,800 less your total variable cost. So yung variable cost, total variable cost natin is dependent on the variable cost per hour of $6 that we calculated in the previous slide. So for the total variable cost, $6 per hour multiplied by the hours of maintenance in June, yung highest point, 850, is 5,100. That's your total variable cost. And your total cost is 9,800. So your total fixed cost would be 4,700. Okay, no? Okay siya. So, mahalaga yung pag-compute mo no variable cost per unit para sa'yo, para makuha mo or ma-segregate mo siya doon sa fixed cost. It's always not it's both. Diba? Remember that your formula is the change in total cost over the change in activity. So it's actually the cost and activity level. Sabay. It has to be the two of them. Cost and the activity level. Tama ba? Nasagot ko ba yung tanong mo? It has to be both of them na gagamitin mo for comparison. Kasi hindi mag-work yung high-low point kung ang gagamitin mo lang is just one cost. Okay ba? Okay. Sige. It has to be the two of them, the cost and the activity. There. The cost equation for maintenance is Y is equal to A plus BX. Diba? Ito na yun. Y is equal to A plus BX. So this is the fixed cost of 4,700 plus yung iyong $6 variable cost per hour multiplied by X. So yun yung iyong equation. Yan. Okay tayo dito no, sa high-low point. Yan. Basta tandaan, has to be both your cost and the activity level. It's the change between your cost and the activity level. Let's go to regression. Least squares, the regression model ang pinaka-popular. It becomes complex with the least squares. Ito yung if you memorize the formula, this is the summation of y is equal to the population or NA ay nabex x sub x. Diba? Yun yung formula na yung mahaba. So, this is a method that is used to analyze your mixed cost if the scatter graph plot reveals an approximately linear relationship between your x and y variables. In contrast to your high-low point method, that dalawang points lang ang ginagamit niya, the high and the low, yung least squares mo, ginagamit niya all of the data points to estimate yung fixed and variable cost components of the mixed cost. Yan. So the goal of this method is to fit a straight line to the data that minimizes the sum of the squared errors. Ito yung hindi ako nagkakamali yung graph nito ay marami siyang points tapos there's a straight line or a slope na maraming dotted lines kasi ginagamit niya lahat ng data points and you have and your relationship would be represented by that slope going upwards kung saan nag-gather ang karamihan ng points. I'm not sure kasi if there's an example later succeeding students. But at any rate, ang least squares method is statistical. Ang kanyang procedure, ang ginagawa is best fit for a set of data points. And so, the method would work by minimizing yung sum of the offsets or residuals of points from your plotted curve. So again, just like your high-low method, this is used to predict yung behavior of dependent variables. Let's see. A software can be used to fit a regression line to the data points kasi nga gumagamit siya ng maraming data points. So, ang mahirap dito, yung dami, the volume of information or volume of data na nakukuha. So, usually dito gumagamit na sila ng what do you call this? Software. So, the cost analysis objective is still the same. Kaya sabi niya din dito sa baba, your least squares regression also provides a statistic called the R-squared, which is the measure of the goodness of fit of the regression line to the data points. Now, the nearer the points are to your regression line, the stronger yung kanyang relationship. If you look at the formula, yung the coefficients of the standards of deviation, dito yung mga concepts na yun. Kung meron kayo sa textbook, matidiscuss ito ng, I think, definition ang binigay nila doon. Coefficient of standard deviation, coefficient of standard of error, R-squared, goodness of fit. But if they're going to ask you questions about that, it's most probably just a definition. Kapag ka siguro least squares regression method, siguro hindi naman ganun karaming data points ang ibigay sa'yo. Let's see. Yeah. We go to your product for inventoriable costs. So, meron kang obvious, no? You have your product and your period costs. So, sinabi natin that your product costs, of course, are cost of producing yung product. These costs are capitalizable. They are inventory, and then they are carried or added or included into your balance sheet until they are sold. Why? Kasi nga they are inventoriable and they form part of your cost. Part ng cost ng iyong binibentang product or service. And so, your product cost would include your direct labor, your direct materials, and your manufacturing overhead, whether this is indirect labor, indirect material, and overhead costs. For example, your direct labor, sabi niya, is the assembly line labor or machine, ginagamit sa machine hours. Direct materials, which is a direct component of your product. Manufacturing overhead, indirect labor, kung meron kang maintenance cost. Indirect materials like your glue or your nails and others. Overhead cost would be your rent, your electricity, your utilities. So tandaan mo, pag product cost, inventoriable siya. Yan. Could either be your direct materials, direct labor, manufacturing overhead. Lahat ng cost na to ay gagamitin. No? Kasi ito ang magbubuo ng iyong product. That which would comprise the cost of your product. So these are generally yung classifications mo of manufacturing cost. Yan. Classifications of product cost. So you can see that the main types of your product cost can be further combined. Meron tayong tinatawag na prime cost, manufacturing cost, and your conversion cost. Pag pinagsama mo ang direct materials at direct labor, ang tawag natin sa kanya ay prime cost. Yan. Pag sinabi mo namang manufacturing costs, ang kasama naman dito ay yung tatlo. Yung prime cost mo plus yung manufacturing cost that you applied in your production. So that's TMC or your total manufacturing cost. Ano ang conversion cost? The conversion cost is your manufacturing cost plus your direct labor. So pag prime cost, diba, if you look at your T accounts, diba, on raw materials, you have your beginning, you have your direct materials, use direct labor, and then the factory. So pag pinagsama mo yung direct material and direct labor, that's your prime cost. Pinagsama mo yung direct labor and yung overhead mo, that's your conversion cost. Pinagsama mo silang tatlo, direct material, labor, and overhead, that's your total manufacturing cost. Diba? Tapos, pag binawas mo doon yung iyong balance in raw materials, ano yun? Yun yung natatransfer doon sa iyong work in process. Yan. Konting jog lang no, sa ating memory kung anong itsura, paano natatransfer ng cost. Yan. Prime cost, manufacturing cost, and conversion. So the other type would have to be your period cost. Yung period cost, wala siyang kinalaman doon sa production mo kasi nga, I mean, hindi naman sa walang kinalaman, but they are indirect. They are expense, no, as they are incurred. Like for example, ang binigay sa atin dito is your G&A, your legal fees, yung sa marketing expenses mo, your accounting department. Diba? These costs, we do not inventory them. We do not add them to our product cost, but they are treated as period cost. Ini-expense natin to as they are in. So, take note of bullet 3. Sabi niya, it's also possible that a company may choose to allocate period cost to the production department. Kaya tayo nagkakaroon nung you are going to distribute 60% of this cost to section 2, 40% to this section. The legal cost would allocate to these sections who use yung service mo. For example, maintenance ka. So, ginagamit ka ng HR, gumagamit ng services mo ng legal, gumagamit ng admin and finance ng iyong maintenance. And so, we call this as your service cost allocation, and there's also methods on how you can allocate these costs. So, posible din yun. Posibleng direct expense siya, pantay-pantay ang distribute niya. For as long as ginagamit siya ng mga sections or departments na to, sige, i-distribute din. But we know that for us to be able to get the accurate costs, dapat lang i-allot din natin, gamitin natin yung mga cost drivers na paigi. Diba? Like for example, mas marami bang ini-spend yung maintenance natin dito sa production kaysa sa admin? Mas marami bang sa admin? Mas marami bang ginagamit na maintenance hours sa legal versus sa accounting? So, mas accurate yung ating pagbigay ng cost estimate kapag tama yung cost driver. So later on, we will be discussing more service cost. Kaya itong topic na to, medyo mahaba-haba. But just like the others with computation or routine siya. Pag nakuha mo yung process, tapos lots of practice. Yan. So, ito na pala yung T account. Sinasabi natin ganun. Cost classifications for preparing your financial statements. your product cost, because they are inventoriable, at na-mention, no, since they are inventoriable, aalis lang siya sa'yo pag binenta mo na siya. Ibig sabihin, lumalabas to sa ating balance sheet. On the other hand, your period costs, which are indirect costs sa ating production, ay usually period expenses. Ito ay treated as a period expense ay nakikita sa ating income statement. Mapapansin nyo dito sa left na box, no, under the product cost, yung arrow towards the sale. Kasi diba sabi natin, the inventoriable costs will only be removed from your balance sheet once it is sold. Kaya makikita mo yung ito. Diba ito yung sasabi ko kanina, beginning balance plus your production or the units you bought, pwedeng ganun, or the units you bought divided becomes your total goods manufactured less your balance in here on the right portion of your T account. Ang difference would be your total goods available for sale. Cost of goods manufactured, which will be forwarded to your T account in cost of goods sold. So pag binenta mo na siya, doon siya lalabas sa iyong income statement. Other costs and cost classifications, you have your opportunity. You will have an opportunity cost kapag meron kang, this is a result of an profit that is foregone for choosing one alternative over the other. Magkakaroon ka sana ng, this is income that is lost because you chose something over the other. Ang common example natin dito, for example, we're a manufacturing company. Tapos we have a warehouse, for example. We have a warehouse. And we no longer need it. So, ang opportunity cost dun is if we forgo renting, yung ipapa-rent out or ipapa-lease na sana natin tong space na to. Instead, we say na it just remains idle. For example, idle versus renting it out or leasing it out. So, ang opportunity cost mo doon would be the income coming from rent. Pag ang pinili mo ay, wag na lang natin ipa-rent. Carrying cost would be the cost of carrying a unit of inventory. Some costs are normally not considered relevant sa ating relevant costing kasi they have already been spent. Kahit na anong gawin mo, kahit na anong decision mo, kahit na anong alternative ang pipiliin mo ay hindi siya magbabago because they are already sunk. They are costs that you can no longer recover. Nagastusan mo na siya. So they are not relevant to the decision-making process. You only use these costs as a point of comparison. Committed costs, we described this earlier. These are costs that have not yet been spent but have been promised to be spent, like your future lease payments that are owed under an existing lease contract, and these are costs that are long-term in nature. Marginal costs are the costs necessary to produce one more unit. But think about your contribution margins. Yan. Other costs, your discretionary costs, your engineered costs, napadaanan na kanina, they have a direct relationship between increasing the incurring of costs. Diba? Like your direct materials, your labor. Imputed costs are costs that are not actually, but are necessary for decision making. Anong klaseng to? Sa viewpoint ng isang economist. Diba? Ito yung mga costs na sa accounting, hindi talaga natin siya dinadagdag kapag tayo ay nagko-compute, say for example, for income or for profit. But when you look at it from the point of view of an economist, nagkakaroon sila ng imputed na costs. Kahit na hindi talaga siya perang lumabas, but it is relevant sa kanyang decision making. But for accountants, for those in the accounting, ang kanilang hindi nila kino-consider ang imputed cost. Kasi nga hindi lumalabas na cash. Usually ganun. Cost of goods sold, ito na pala yung formula. formula, the costs that were paid in order to produce or purchase the goods that were sold during the period. So, you have your beginning finished goods of inventory. So, i-add mo yung mga materials na pinili mo na from outside or yung mga minanufacture mo kung ikaw ay isang manufacturing company. Pag binawas mo dito ang iyong finished goods and you will have your cost of goods sold. So this formula, it tells you that this ignores goods that are lost or stolen but is sufficient for our purposes here. Because if you encounter later on a problem, ang meron lang kasi dito is spoiled goods. No? Pwede silang magbigay ng spoiled goods, but meron din na kaukulang treatment kapag spoiled goods. Depende doon sa magiging policy ng company mo. If this is something that you would charge as an outright expense, or if this is something that you would charge between your work in process, your finished goods, or between your work in process or your finished goods, or directly to your cost of goods sold. Pero sasabihin, kailangan explicit siya na ito yung policy natin at ito ang ginagawa natin para sa lost or stolen or spoiled goods. But generally, ang assumption natin, this formula is already accepted. Is accepted. Kailangan explicit na sabihin sa'yo ng problem kung ano ang polisiya ng business in terms of lost, stolen, and spoiled goods. Kung saan mo siya i-charge yun. So, wag mag-alala, hindi silent ang problem sa ganun. It has to be explicit. Mahirap tayong manghula, no? Magaling tayong mag-compute, pero hindi tayong magaling manghula. This is the cost of goods manufactured is ito siya nandito siya sa portion na to. Here. Yeah. Na-imagine ko siya sa T-accounts. But, okay. I'm sure you also do, no? Kasi it's easier to picture it like that. So, for a manufacturing company, this is part of the cost of goods sold formula. So, you have your direct materials used plus your direct labor used. And your manufacturing overhead applied would be your total manufacturing cost. Ano ulit itong dalawa? Direct materials and direct labor would be your prime cost. Your direct labor and your manufacturing overhead applied would be your conversion cost. The three of them together would be your manufacturing cost. You add your beginning work in process inventory plus your ending work in process inventory would be your cost of goods manufactured na pupunta sa iyong finished goods na account or account. So calculation in the next slide. Yan. Anong cost ang ini-inventory natin if we talk about direct materials? So kasama dito yung pinili mo. This is going to include transportation in or yung mga freight in. So there's considerations for that. Less your returns and less your ending direct materials inventory for you to be able to determine yung iyong direct materials to be used that is forwarded in your working process. I hope that you're able to remember yung concept ng iyong raw materials, finished goods, raw materials work in process and finished goods. Yan. So we go to variable and absorption costing. Yan. So variable costing, yung product cost mo would include only 3 items: direct materials, direct labor, and variable manufacturing overhead. Yun ang difference nila dun sa absorption costing. Kaya nga kapag nagkaroon kayo ng reconciliation at the end of your problem, ang titignan mo lang dito is yung fixed component kasi yun lang dapat yung kanyang difference. If it's more than the fixed component, nagkamali ka na doon sa iyong computation. So, for variable costing, your product cost normally include your direct materials, direct labor, and variable overhead. Your period cost, or those that are expensed, would be your fixed manufacturing overhead, yung variable selling and admin, and yung fixed and selling and admin. Ano ang nakikita mo when you use the variable costing approach? Naha-highlight sa variable costing approach ang iyong contribution margin. Diba? Because if you reduce your revenue or your income by your variable cost, you get your contribution margin. Yan. For absorption costing, what you consider as product cost would be your prime cost, your conversion costs. So, sama yung fixed manufacturing overhead, and what would only be included as your period cost would be your variable and fixed selling and admin. Tama, no? Tama. So again, yung period cost, hindi natin siya kinakapitalize into inventory, fixed assets, or prepaid expenses. Okay. So your variable and absorption costing are two methods that are different in only two ways. Number one, yung factory fixed overhead. Sabi ko nga, di ba? Kasi if you look at this one, no, pag nag-reconcile ka, ito lang, oh, fixed manufacturing overhead lang ang kanyang difference. And of course, yung pangalawa is the presentation of the income statement of different costs. So the variable costing is also called your direct costing. The US GAAP requires the use of absorption costing for financial statements. However, when you mas prefer naman ang variable costing for analysis. But kaya niya nasabi dito that your variable costing is used internally. But for reporting purposes, because the requirement is absorption and we are following the US GAAP, then we are going to present our financial statements using absorption costing. But for analysis and internal usage, wala namang restriction doon sa use of variable costing. Ayan. So again, one of the main advantages of using your absorption costing would be that it is GAAP compliant. So some of your companies, no, or where you work or where you're affiliated now may choose to use the variable costing method. So with the variable costing, all of your variable direct costs are included in your cost of goods sold, and then your fixed direct costs are simply allocated to operating expenses rather than cost of goods sold. So, bakit ang requirement ng US GAAP is absorption costing? Because of the matching principle. It's the matching principle. Kasi the reason why your variable costing isn't allowed for external reporting is because it doesn't follow nga yung ating matching principle. So it fails to recognize, no, na meron tayong certain inventory costs in the same period kung saan the revenue is generated by these expenses that have been incurred. Like your fixed overhead. So hindi siya pasok sa ating matching principle. So I move to this slide as we explain more on your variable. For the absorption costing kasi, yung ating method, no, in summary, when you use the absorption costing method, you would apply, no, all of your direct costs, your fixed overhead, and your variable manufacturing doon sa cost of the product. So sa variable cost, ang isasama mo lang naman doon, or those costs that you will only apply to your products or services would only be those variable costs. Anong nangyayari doon sa fixed cost? Ine-expense. Sa absorption costing, ginagamit natin dito is, it calculates yung per unit cost of overhead. In comparison sa yung variable costing, ang na-estimate mo dito is a lump sum for your fixed overhead cost. But laging bumabalik tayo dun sa difference niya na fixed. So, how do we value your inventory under absorption costing? So, your inventory value would include what? Your direct materials, your direct labor, and all of your overhead. In contrast, doon sa variable costing mo, your inventory value will not include fixed overhead. Under absorption costing, when we talk about accounting, so under absorption costing, minsan nagkakaroon ng issue under absorption costing when we want to picture profitability for a certain accounting period. Kasi nga, all of your fixed costs are not deducted, di ba, from your revenue. Kailan lang siya na-deduct? When you have already sold the inventory. So it can cloud yung picture ng profitability. In contrast, pag ang pinag-usapan natin is accounting under variable costing, ang problema naman dito, it doesn't match your expenses to revenue with regard to your inventory. When we talk about the same accounting period. However, your variable costing can result, it may result in a more realistic inventory value. And of course, yung actual na profit kasi nga, your unsold stock, hindi naman siya nag-a-absorb ng fixed overhead. And again, one of the differences between your costing methods is your absorption costing is acceptable under GAAP and variable costing is not, but there is no restriction as to the internal use of variable costing. Over the long term, both methods will provide the same total net income. The difference between the methods is the timing difference. Yan. Effects of changing inventory levels. So, when inventory increases during the period, alam nyo ang take ko sa ganito, it's easier for me to picture the relationship when I use the T accounts. Diretso yung relationship niya. Depende doon sa method ninyo when you study kung ano sa inyo ang mas mabilis nyong mapipicture yung kanyang relationship. Because normally, sa ating multiple choice questions, narrative statements ang gagamitin niya sa inyo to ask about the effect changing inventory levels. Hindi naman siya, well, maliban sa typical na competition, but pero mas marami ang MCQ questions that are in statements or that are in narrative. So you have to devise a way for you to picture that relationship more quickly para hindi ka malito, hindi ka masyadong malito sa pagbabasa ng kanyang narrative. So in this slide, we'll tell you about the relationship of the effect of changing inventory levels. Like for example, what happens to your inventory kapag you use absorption method and when you use variable costing and then the production is greater than or lesser than sales. Okay, so under this slide, we are using the absorption method. So under the absorption method and when the production is greater than sales, what happens to your inventory levels? Sabi niya, when your inventory increases during the period. Kailan ka nagkakaroon ng increasing inventory? Kapag ka mas mataas ang production mo sa sales. And you are using absorption costing, net absorption costing method. It's going to provide you with a higher net income. Why? Because of the fixed overhead. Kasi nga sabi natin, under absorption, ini-inventory natin yung fixed overhead. Kasama siya doon sa cost ng ating inventory. And therefore, if it is not sold, it is carried as part of our balance sheet. Kailan siya mawawala sa'yo? Pag binenta mo. So, in times where production is greater than sales and you are using the absorption method, this method is going to provide a higher net income because of the overhead that you carry in your balance sheet. I hope that is clear. No? Yun lang ang kanilang difference and the presentation. However, there's going to be a decrease in your inventory when production is lesser than sales. Under the absorption method, is going to provide a lower income because why? All of your current period's fixed factory overheads are expensed in the income statement. Maliban doon, kasama pa dito yung fixed factory overhead mo from the previous period. It's just the T account. And then I make the analysis based on the T account. Ito siya. I'm sorry, just go back. Slide. Mas, example ito, no? I put this in a T account, like, beginning, ganun. Ganito. I have one T account for raw materials, I have one T account for work in process, and one T account for finished goods. And then the beginning, para makita ko yung placement, diba? Beginning, ending, direct purchases, freight in, and then yung items coming from raw materials would of course be having this line para makita yung cost na to ay pupunta sa work in process. Pag pinagsama ko yung yung materials used ko for production plus for work in process, beginning less work in process, and would give this value which for finished goods. I would advise for you can search the accounts for finished goods, and pero ito na kasi siya it's essentially the same. Ito beginning finished goods, ganun lang yung format niya. Mas madali kasi sa mata ko na makita yung sa format na ganun. Yung kanyang, para makita ko, kasi diba there's the concept of a debit and a credit. Pag sinabi mong debit, it's an addition with sa credit. So pag lahat nandito siya sa side ng right, and it's an asset account, diba? Pag nasa right side siya ng account ko, it's immediately a decrease. Pag nasa left side siya, it's normally it's an asset account, then the normal balance would be a debit. So ang any debits would be an addition. So ganon. I don't know if that will work for you, but kung matry mo siya, hindi ko kasi maano yung marunong gumamit ng Jamboard. But essentially, plug mo lang itong formula na to, for example, sa isang T-account. Mahalaga din na pag ginamit mo yung T-account, alam mo yung normal balance nung account. But if it's inventory, it's an asset account. So lahat ng yeah, later we can try it. But we are not, no. I looked at yung ating slides. I'm not sure even if we can finish the slides, but we will try. Kasi halos magkakahi naman tong mga na to. Tong mga slides na to, the concepts are repeatedly discussed all throughout the slides. So most likely yung ating solutions or ang ating problem solving would for next week. But for now, I would like to focus on the discussion on your slides para at least yung concept nandun. But yes, we will show next meeting paano gamitin yung terms. Yan. So we're good for the effect of changing inventory. Note that under absorption costing, a company can manipulate your income by increasing production, which will cause more of the fixed factory overheads to be on the balance sheet as income. Presentation under absorption costing. Ito. Under absorption costing, your income statement is broken down into components based on whether the costs are manufacturing or non-manufacturing. So under absorption costing, you have your sales revenue, plus your cost of goods sold, which would include your variable and fixed manufacturing costs, which will get to your gross margin. Reduced by your variable manufacturing cost, and of course your fixed manufacturing cost, you have your operating income. So again, for those of you who are taking down notes, sales revenue, you have to reduce it by your cost of goods sold to include your variable and fixed manufacturing costs to get your gross margin. This is recorded. Yeah, this is recorded. Less your variable non-manufacturing cost and your fixed non-manufacturing cost for your operating income. Two things that would differ under absorption and variable costing is your treatment of fixed overhead as well as the presentation. Yan. Anong itsura under variable costing? Sa variable costing, ang kanyang presentation naman is based on whether your cost would be variable or fixed. Kaya nga sabi ko kanina, dito din na-emphasize yung contribution margins. Diba? Kasi pag If you reduce your sales revenue by your variable manufacturing cost, you are able to get your manufacturing contribution margin. If you reduce this further by your variable non-manufacturing cost, you get your contribution margin. And we know for the interpretation of the contribution margin, this is the minimum. Minsan nga, when we make our analysis on transfer prices, isn't it that the contribution margin is the minimum selling price that should be accepted internally in the sales internally? And then the contribution margin in your analysis would also be used kung ano yung kailangan mo ma-recover kapag ikaw ay nagko-consider ng special order. So maraming gamit ng ating variable costing. Further, if you reduce your contribution margin by your fixed cost, both manufacturing and non-manufacturing, then you have your operating income. This is the same, no? Required by US GAAP, hindi nila accepted ang variable costing because of the failure comply doon sa matching principles. Your fixed costs are usually not relevant in your decision making. Kaya nga sabi natin, acceptable ang absorption costing sa reporting, but for internal reporting purposes, ang analysis mo ng iyong costs and your projections for future estimates ginagamit dito is variable costing. Your variable costing operating income is influenced by the level of sales only and not based on the changes in inventory levels. Variance analysis under absorption costing is difficult because of the factoring in of your fixed costs. The impact on income of fixed cost is visible under variable costing because your fixed costs are listed in the income statement as expenses. And finally, it is easier to calculate your contribution for a division or product when variable costing is used. Remember, if you are also not only in special orders, but when you are making decisions whether to discontinue, to continue, or to shut down operations, your basis would be what? Yung contribution ng division ng segment or the product, and you would normally use variable costing for that kind of analysis. So, malawak yung kanyang use dito. Ito yung sinasabi ko, for the reconciliation between the difference in your variable costing and absorption costing is the fixed overhead cost per unit. Yun lang ang kanyang difference and the presentation. And times the number of units of change in inventory would be the difference in your income. Take note, this works only in the above situations. There is no beginning inventory. Or number 2, if the LIFO inventory cost po assumption is used and the ending inventory is higher than the beginning inventory. Or number 3, under other cost flow assumptions, the beginning inventory is valued at the same per unit manufacturing cost as the current year's planned per unit manufacturing cost. Generally, sa lahat na nakita natin ng multiple choice questions, no, it is assumed na when you do the reconciliation na these 3 conditions are present. Kaya dun sa mga multiple choice questions na may encounter nyo, you can try, no? Kasi usually ganun wala namang complex. Basta alam mong i-reconcile at alam mong ang difference niya is the fixed overhead in the fixed overhead cost per unit. No? Kaya mahalaga na either wala kang change sa beginning inventory or pareho yung cost nila. Because kung hindi sila pareho, di ba naka-carry forward kasi siya. So pag naka-carry forward, kakaroon din ng change. Yan. Kaya required na present ito. But so far, dun sa ating mga na-encounter na mga MCQs na it is assumed na present ito. And that is proven when you do the reconciliation na ang difference lang na lumalabas is fixed overhead. Yan. Unit cost computations. And Harvey Company produces a single product with the following information. I'm sorry. Okay. Harvey Company produces a single product with the following information available. So you are producing 25,000 units annually. Bigay sa'yo ang variable cost per unit, direct materials, labor, and variable manufacturing overhead, $10 per unit. You have variable selling and admin expense, $3 per unit. You also have fixed cost per year, manufacturing overhead of $150,000, selling and administrative expenses of $100,000. So, paano siya gawin? Yan. We are going to determine your unit cost using the following. Okay, so for absorption costing, ang difference again is what? Yung fixed manufacturing overhead. Sabi ko sa inyo kanina, di ba? Normally nang ma-encounter ninyo, yung tatlong assumptions, yung restriction yan, kailangan present lahat. Di ba? That's the only time that it's going to be. Pero sabi ko nga, in most, if not all, the MCQs I've encountered, ang assumption na yun ay totoo kapag ganito na yung pinakita sa'yo. Kasi ang difference lang niya ay nasa fixed manufacturing overhead. Alright, so 10 for absorption costing and for variable costing, and obviously the difference would be the fixed manufacturing overhead of 150,000 units annual, annual. Yeah. Cost per year, 150. Yan. Over 25,000 units. Excuse me. Over 25,000 units. For absorption costing, you can see that your unit product cost is higher, 6 pesos, when attributable to the fixed overhead. Otherwise, yung variable costing mo nasa $10 lang. So take note. So take note that under absorption costing, all of your production costs, whether they are variable or fixed, are always included in determining your unit product cost. Pag variable naman siya, as the name implies, only the variable production costs are included in your product cost. Ito, daan to, ito lang. And the presentation. Variable and absorption costing income statements that assume the following additional information for Harvey. So you're able to sell 20,000 units during the year at a price of $30 each, and there is no beginning inventory. Yeah? Let's compute the net operating income using both your absorption and variable costing. Medyo complex kasi siya kapag hindi present yung tatlong yun. Sorry. Ayan. So, under the variable costing contribution format ng ating income statement, look, there's the variable, that's the contribution margin. So, depende sa'yo kung how you would like to present it. At saka depende rin dun sa given. You could use either the per unit approach or the total approach. So, but for this one, it's better for us to present muna ngayon doon sa using the total approach kasi ang hinihingi niya sa'yo is the net operating income. So it's total. So for the sales, you're able to sell $20,000 at $30 per unit. So you have 600,000. Less yung variable expenses mo or the variable cost of goods sold per unit, the one we computed in the earlier slide, kung saan 16 doon sa absorption mo. Under variable costing, it was 10. Applied to the 20,000 units sold. So that's 200,000. You apply the $3 per unit na variable selling and admin expense to the 20,000 units sold, you get the 60,000. Ito naka-highlight naman siya. Yung 10, dun sa unang slide din. Your total variable expenses, 260. If you reduce your sales by the total variable expenses, you are going to get the contribution margin of $340,000. ano yung posibleng tanong sa'yo? Binigay ka nung gano'n, no? Ano yung, how much would be your contribution margin? How much is your variable cost per unit? How much is your, siguro hindi naman, how much is your total variable expenses? And the net operating income. And you are going to reduce, no, itong contribution margin mo by your fixed expenses. So, tignan mo to. Fixed manufacturing overhead of 150,000. Remember that under variable costing, all of your fixed manufacturing overhead is expensed. It is treated as a period cost. Ba naalala nyo kanina yung graph or yung table kung ano yung considered as product and period cost for each of your costing methods. Further reduced by the fixed selling and admin expenses of 100,000, total fixed expenses of 250,000, and therefore your net income under the absorption, under the variable costing is $90,000. Of course, there's going to be a comparison dun sa ating absorption costing. So look, instead of the contribution margin, you get the gross margin. Kasi ang ginawa niya, yung sales mo, still the same even, 20,000 units at per get a sales of 600,000. This time, the product cost is 16. Diba? Kasama dito kanina yung fixed manufacturing overhead per unit of 16. Yan. Applied to unit sales of 20,000, so that's 320. You have your gross margin of 2. Further reduced by your selling and admin expenses, variable and fixed, your net operating income is $120,000. Take note, dun sa baba, sabi niya, fixed manufacturing overhead is deferred in inventory. Deferred in inventory is 5,000 units at $6. So this is third. Bakit siya naka-defer? Bakit siya naka-defer? Kasi hindi mo pa siya nabibenta. Nandun siya sa iyong balance sheet. Yan. When you compare the two methods, sa absorption costing, no, obvious, no, it's obvious that there is no period expense. Sa variable costing, itong total na fixed manufacturing overhead of 120 coming from the cost of goods sold and the 30,000. Saan nga ba yung 30,000? Yun yung 5,000 units at 30. Yung kanina, yung at 30, sorry, at 6 pala, $6. Yan. Ito siya. Yun yung ending inventory are all treated as period expenses under your variable costing. If you look at the total, pareho naman 400. So the difference really lies in your period expense. And again, proving na sa problems na ganito where the reconciliation would only show you that the differences in the fixed overhead, yung tatlong requirements yan present or are complied. Ito na. Reconciliation. We can reconcile the difference between absorption and variable income as follows. So this is one of the, I do not suggest, kung may time kayo to compute, you have to do it the long way first. Because if you don't really have you're not very familiar na doon sa relationship ng cost na yun, or hindi ka very familiar doon sa effect, for example, ng increasing or decreasing inventory, it might be a little difficult for you to do the reconciliation. No? So I would suggest that you do the long way first para makita mo lang yung flow, para hindi ka mawala, para makita mo lang yung flow, and then later on, kapag ka medyo mas gamay mo na siya, then baka pwede ka nang dumiretso doon sa shorter na way. So we can reconcile the difference between absorption and variable income as follows. So kasi ka bank reconciliation, reconcile mo yung variable cost operating income mo of 90,000 with your absorption costing net income. And we know that the difference comes from the fixed overhead, which is found in your balance end of inventory. Ilan ang natira sa inventory mo? 5,000 at a cost of $6 per unit. Okay. So, yun na. Remember this one? Kanina pa to no? Dun sa unang slide na compute. 150,000 fixed manufacturing overhead over units of production. $6 per unit. 5,000 is your ending inventory. And kasi di ba 25,000 units yung reduce mo, 20,000 yung binenta mo dun sa ating example in previous slides. So there, 120. Yan. Masaya naman to no? Basta may time gawin siya. Extended comparisons of income data for Harvey Company in year 2. So, the same, no? Units produced, 25. Units sold, 30. Zero na yung ending inventory mo. Tama, di ba? You have ending inventory in the previous year of 5,000 and then you produced 25. You sold 30. There. This is the beginning inventory 5, correct? So, said splice is still at $30. So for variable cost per unit, direct materials, labor, and variable manufacturing overheads 10. You have selling and admin of 3. Fixed cost per year still stands at $150, and selling and admin at $100,000. So compare lang natin. There. Since the variable cost per unit, your total fixed cost, and the number of units produced remain unchanged. Diba isa yun dun sa mga conditions na pwede mong gamitin. The unit cost computations would also be unchanged or they would remain the same. Ito yung kanina pa rin, ginamit natin for year 1. 10 both for absorption and variable costing for your manufacturing costs. And then fixed manufacturing overhead stands at $6 for absorption costing. Unit product cost 16. Variable costing still remains at $10. So same even. Yeah. Same unit cost. Yeah. Variable costing. So kanina it was 90, no? It was 90. So this time, 10 pa rin ang ating variable manufacturing costs. However, ang difference naman this time is the unit sales. So instead of 25, it's 30. So obviously, there is an increase no, sa ating net operating income. So it's still the same. Variable manufacturing cost at 10. However, this time, this is applied to 30,000 units sold. So your total contribution margin, 510 in year 2. And again, under variable costing contribution, under variable costing method, all of your fixed manufacturing overhead of 150,000 is expense treated as a period cost. Anong tanong sa'yo? How much is your period cost for this? For Harvey Company in year 2, it was 250. So net operating income is 260. Okay. I hope we're still good, no? So, under the absorption costing income statement, it was 120. 120 kanina. So now, yung unit product cost mo is still 16. Again, ang naging diferensya lang niya would be the 30,000 units. Kasi kanina 25, so now it's 30. So your net operating income is 230. Note that the 5,000 units balance in year 1 is your beginning balance in year 2. That's why you are able to sell 30,000 units. So this year 2, wala ka na ending inventory. Correct? 5,000 beginning balance, 25,000 units of production, 30,000 units sold. Zero balance. Okay. So good. Still at $6 per unit. So that's 30. So that's 30,000 released. Yan. So you have a gross margin of 420. Your SNA would be 190. And net operating income is now at 230,000. We reconcile. Still, fixed manufacturing overhead over your units produced would give you cost of $6 per unit. Fixed cost per unit. Yung variable costing net operating income mo was 260. And if you reduce this by the fixed manufacturing overhead that is released from inventory, part kasi siya ng ating balance sheet. So pag binenta mo na siya, mawawala siya sa iyong balance sheet. And then, your absorption costing net income would be correct. Nandiyan na siya sa 230. Kaya mahalaga that you are able to see the longer process first before kang dumiretso dito sa iyong shortcut. So that you also know kung bakit ganun. At ganun yung nangyari sa kanya. Okay. There. So for the costing method, in the first period, you have absorption, it was 120 to 30. For variable, it was 90 and 260. So pareho sila din sa dalawang taon. So ito yung isang na-mention natin kanina, that they would result the same focus. There. The relation between production and sales, its effect on inventory, and the relationship between the variable and absorption costing. When your units produced equal the units sold, there is no effect. Kasi pareho lang yung production mo sa iyong sales. So your absorption costing net income will be the same as your variable costing net income. Magkakaroon lang naman kasi tayo ng difference saan? Fixed overhead. Fixed overhead. If your units produced are greater than the units sold, ibig sabihin, mas marami kang inventory on hand. And because you have more inventory on hand, under absorption costing, mas mataas ang iyong magiging income over variable costing. Why? Kasi merong nakaipit, nakapalaman doon sa iyong inventory na fixed portion of the overhead of inventory that is not sold. So the other way around, if your units produced is less than your units sold, kakaroon ka ng decrease in your inventory. And when that happens, your absorption costing net income will be lesser than your variable costing net income. So these are also very important for you to know. It's very important for you also to understand para pagbalik-balik pa rin man yung statement, yung given, but this is constant na itong mga insights na ito. Kasi nga yung ating pag-define ng ating costs at pag-understand ng components ng inventory, components ng mixed cost, components of your finished goods, and their relationship to your incomes. Ito ang mga questions na mataas ang chance na lumalabas sa inyong exam. So please, take the time to analyze tama ba yung relationship. We go to joint products and byproducts. Yeah. So if you say that it's a joint product, we're already in slide 62. Yeah. If you talk about a joint product, to be considered a joint product, each of your products must be roughly of equal economic significance. If the two products have significantly different market values, at merong kang product na more valuable than the other, then it is considered that this more valuable product is the main product. And that the second product with the lesser value would be known as your byproduct. Ano ba ang magiging magandang basis of comparison natin for joint product na byproduct? Sabi nga natin, if you define, for example, by your definition, what is a joint product? When the production of two or more products of similar value and they are made together with the same input and the process, then it's called a joint product. So, you have production of two or more products with a similar value made together with the same inputs and the same process, and it's a joint product. If you say that this is a byproduct, this is by, so it's incidental. Ang production niya ay incidental only. It's incidentally produced during the processing or processing operation of a main product. If you differentiate a joint product and a byproduct in terms of economic value, sabi nga natin, no, joint product siya kapag they have the same economic value. But it becomes a byproduct kapag yung isang product has mas mataas ang kanyang market value over the other product. Then yung mas mataas ang value, that one is our main product. And the lower, or the product with the lower economic value is the byproduct. Sa joint product, in terms of production, it is defined as conscious. You are conscious that you are making two or more. Yung byproduct is a consequence of producing one or two. Diba? By the term by. If in terms of input, kapag joint product siya, there's raw material for both your products. Pag byproduct, usually scrap of the main product. Or minsan kahit nga hindi scrap, minsan waste of the main product. Pag joint product, in terms of further processing, pag joint product, you are required to turn the joint products into a finished product. Kapag byproduct siya, there is no requirement for you to further process the product. Excuse me. Yeah. Joint products are two or more products that are produced sharing the same production process up to what's called the split-off point. So mahalaga yung split-off point. The joint costs that are incurred prior to the split-off point need to be allocated between or among joint products because ginamit sa kanila yung process and your operations. Pareho ginamit sa kanila. The method that should be used will be given. It is required na sabihin sa inyo kung ano yung ginamit na method. So, you could use either the physical unit method, the relative sales value method, RSV, or the ENRV, ND, constant gross margin percentage. So, pag sinabi mong physical unit method, by the name of the title of the method is you would use the weight of volume, the number of units or other appropriate physical measure. Kapag relative sales value method, ginagamit natin dito would be the relative sales value of the product. Ang gagamitin mo para i-allocate yung joint cost. Pag estimated net realizable value, of course, na gagamitin mo ay yung estimated NRV. So, tignan nyo tong note niya. For a product that needs additional processing before it can be sold, your net realizable value is calculated as the sales price minus cost to complete and dispose of. But usually, ay mangilan-ilan na meron silang dinadagdag different cost for the disposal. But most often, yung cost to complete lang ang nandoon. But pwede silang magdagdag ng separate for the disposal cost. So kung wala naman dun sa problem, huwag mong hanapin. Constant gross margin percentage, net realizable value, allocates the joint costs so that all of the joint products have the same gross margin percentage. Ang hina-highlight naman dito is what? Yung gross margin percentage. So depende. Depende sa industry, depende sa priority, depende sa strategy. Yan. So maraming factors ang mag-play into the kind of method that's going to be used by one company over the other in its allocation of joint costs. Yan. So for joint costs, you have a cream and liquid scheme. Joint cost of 110,000 gallons raw milk, and then you have the processing to split with your joint cost of 400. So ito yung i-allocate mo. No? Beginning inventory in gallons is 0 for both products. You have production in gallons is 25,000 for cream and 75 for liquid scheme. So that's a total of 100. Mahalaga yung totals kasi diba yung percentages of use. Yan. Sales in gallons, 20 over the 20,000 for cream, and you have liquid skim is 30. For ending inventory in gallons, it was 5,000, and then again 45,000 for liquid skim. Selling price per gallon of cream is $8, and for liquid skim ay $4. Yan. So let's see. Okay, so for the overview, sabi nga natin, if it's a joint product, they use the same materials and they use the same process for both of those products. Kaya yung 400,000 where you used to process 110,000 raw milk would be considered joint cost for the two. Mahalagang ma-determine natin yung split-off point for us to be able to allocate cream 25,000 gallons and then consequently for liquid skim of 75,000 gallons. So yun yung i-attempt natin doon. You have to tell you which method to use. Diba? Ayan, sasabihin niya sa'yo, allocation of joint cost using sales value at split off. Hindi pwedeng hindi niya sabihin sa'yo. Otherwise, you have no basis. Panel B, product line income statement using sales value at split off method for May 2012. So susundan lang natin siya. It's actually, when you follow the process of joint cost allocation, ililid ka ng profit. So sabi niya, you use sales value at split off. Diba? The sales value that was provided to us is $8 and $4. Tingnan natin. 25,000 gallons para kay cream, and it was 75,000 gallons for liquid skim, 100,000 gallons for the two. Appropriately $8 per gallon for cream and $4 per gallon for liquid skim. So yung sales value of production at split off is what? $200,000 for cream and $300,000 for liquid skim. Let me just go back for it. For a total of, okay. And then, kaya nga natin kanina sinasabi natin yung percentage. Weight. 200,000 sales divided by, sales of cream divided by the total sales of 500,000. And then the 300,000 sales value of liquid skim over 500. So that's 60. So that's 46. Ilan yung i-allocate? I hope you can still hear me. Can I get a thumbs up? You can still hear me. Nakas na pala kasi dito sa akin. Can I get a thumbs up if you can still hear me? Oh, nobody's there. Hello? Okay. Thank you. Ang lakas na ulit dito sa amin. Sana wag akong maputol. But anyway, fine. In the event that will happen, I will come back. In the event na hindi na ako makabalik, no matter how I try, I will message Sir Marma. So again, the joint cost that we need to allocate is the total of 400,000 over the 110,000 gallons. So that's 64. So 1640 of the 400,000 is 160 for cream and then 240 for liquid skim. And so the joint production cost per gallon, if you look at line 6, line 7, so that would $160,000 joint cost divided by the 25,000 units or gallons sold, it would be 6.4 for cream. On the other hand, it's $240,000 joint cost for liquid skim divided by the 75,000 gallons at production. So that's 3.20 joint cost per gallon. Yan. Panel B, the product line income statement using the sales value at split off method for May 2012. Okay, so if we are able to allocate using sales value at split off method, magkano ang ating profit or magkano ang ating margin. Ngayon kasi yung mahalaga magkano yung ating margin kapag ganito ang ginamit nating method. So the revenue, 200,000 gallons at $8 per gallon. 30,000 gallons at $4 per gallon respectively. That's 160 and 120 per liquid scheme. Cost of goods sold, joint cost. Ito na yung ating 60-40, di ba? Production cost, ito siya, yung nandoon sa line 5. That's 160 and 240 for a total of 400. I hope you're still able to follow. We are going to deduct the ending inventory, which is 5,000 gallons for cream and 45,000 gallons for liquid scheme. Magkano nga ulit? It's 6.40 joint product cost per gallon kay cream at 3.20 per gallon per liquid scheme. So that's 5,000 gallons at 6.40 per gallon. It's 32,000. For liquid scheme, 45,000 gallons at 3.20 joint production cost per gallon ay 144 is 176. Cost of goods sold for cream was 128. By the way, this is an ending inventory, no? Kaya siya dinita. Yan, no? Ending inventory. Kaya siya dinita. And then for liquid scheme, 240 less 144, that's 96. Cost of goods sold total is 224. So your revenue of 160 less your cost of goods sold is 128, that's 32,000 for cream. For liquid scheme, revenue of 120 less cost of goods sold of 96,000, that's 24,000 for a total of 56,000. Gross margin percentage, pare-pareho. 20%, 32,000 over 160, and then you have 24,000 over 120, and for the total, 56,000 over 20. Okay, so that's the first na illustration. We are going to use your sales value at split off. Okay. Next would be the net realizable value method. Sabi natin, if this is the method that we're going to use, we allocate your joint cost on the basis of the relative net realizable value of your total production of the joint cost, where the net realizable value is the final sales value less your separable costs. I guess they're going to give us the same example. When you have a net realizable value, pareho to dun sa ating sales value at split off method. Joint cost still for 100,000. You still process 110,000 gallons. And if you further process your cream, you're going to get butter cream. So, of course, there's going to be additional further processing cost for each of your products. No? Kasi pareho mo silang ipaprocess further. Thus, the presence of costs that can be separable for both your cream and liquid. Yan. So, si liquid scheme, if you further process it, it's going to cost you 520. If you further process liquid scheme, it's going to result to condensed milk of 50,000 gallons. Let's see. Yan. Same even, no? Itong 110,000 and then the joint cost of 400. Separable cost of processing 250,000 gallons of cream into 20,000 gallons of butter cream. Ang cost niya ay 280. And then for your liquid scheme, into condensed milk, it's going to require $520,000 cost. Beginning inventories, 0. We have no information. Production in gallons, pareho, no? It's 25 and 70. Andito naman, 25 and 75. And then for butter cream, it was 20 and 50. Yan, 20 and 50. We are going to further process cream and liquid scheme. So in line 9, makikita ninyo, transfer for further processing, 25 and 75. So lahat yun process further, which is why you have 0 sales here for cream and liquid, and then you have 0 ending inventory for cream and liquid. Kasi lahat ng gallons na yon ay i-convert into buttercream and condensed milk. Yan. So it's going to give us again, sales in gallons for buttercream is 12,000. For condensed was 45. And then you have ending inventory in gallons of 8. So you sold 4. And then you have ending inventory of 5,000 for condensed milk. So you're able to sell 45. Yeah. Sorry. 12,000 sales for buttercream and ending inventory is 8, not 4. Ending inventory is 8. Yeah. Selling price per gallon, $8 for cream, $4 for liquid skim. Si buttercream, you can sell it at 25, and for condensed milk can be sold for 20. Yeah. Madali siya, no? Kasi, ang sabi ko nga, ililitan niya doon sa iyong dapat gawin based on the title or based on the cost method. Yeah. So we are going to allocate it using NRV, and consequently, papakita natin yung income statement niya using this method. O kanina, yung resulting gross margin percentage were the same para doon sa tatlo. But one of the conditions for the first illustration is that there is no further processing cost. Diba? Tumigil na siya sa liquid and cream. Liquid skim, I should say. Yan. Final sales value of total production during your accounting period, it was 20,000 gallons for buttercream and 50,000 gallons for condensed milk. So, i-apply mo lang yung kanyang selling price of $25 per gallon for buttercream and then 22 for condensed milk. And thus, you have 500,000 total for buttercream and condensed milk, total of 1.6 for the two products. And then, binigay sa atin yung deductible separable cost, given naman to, no? So, that's 280 and 520. And so, yung ating net realizable value, if you remember, is your final sales value minus your separable costs. Yeah. So, your net realizable value at split off for buttercream is 220 and for condensed milk, it is 580. Tapos kukunin mo ulit yung weight. Kukunin mo ulit. So, ganun ulit na yung kanyang process. It's what we call this, reiterative in nature. Paulit-ulit lang siya. So, the weight would be based on the net realizable value at split off 220,000 in line 5 and 5 divided by their 220,000 plus 580, the total of 800,000. So that's 220 net realizable value at split off divided by the total net realizable value at split off of 800. Kuha mo yung 27.5%. So we do the same for the condensed milk. So it is at 72.5%. Excuse me. Yan. So your joint cost of 400,000 will be allocated kay buttercream 27.5% and then kay condensed milk at 72.5%. So out of the 400,000 joint cost, total joint cost, ang pupunta kay buttercream ay 110,000. Kay condensed milk, it was 290,000. Okay. So, okay pa yun, no? Mahalaga yung line 7 kasi ito yung kailangan nating i-deduct doon sa ating revenues for us to arrive at gross margin. So, finally, magkano ang iyong production cost per gallon? 110,000 line 7, the joint cost, plus yung dineduct mo na separable cost in line 4, yung 280. So, that's 330,000 divided by the 20,000 gallons that you sold. So let's do the same for condensed milk. You have 290,000 in joint cost plus 520,000 in separable cost divided by 50,000 gallons sold. So the production cost per unit for buttercream is at 19.50 and for condensed milk it was at 16. So nakuha na natin, we were able to distribute yung joint cost based on NRV. What does the income statement look like? So again, you have your revenues na nagbenta ka ng 12,000 gallons at 25 per gallon for buttercream. And then you have 45,000 gallons. And then you have 45,000 gallons for condensed milk at 22 per gallon. So that's a total of 1,209. Diba itong nakuha natin na joint cost and separable cost all came from our allocation from up top. So that's 390 production cost for cost of goods sold and then 810 for your condensed milk. So again, kung meron kang natira doon sa ending inventory mo, in this case, it was 8,000 gallons for buttercream and it's 5,000 gallons for condensed milk. Magkano ulit yung production cost per gallon? It's 19.50. Ito yung side row 9. Row 9. 19.50 and then 16.20 for condensed milk. Yan. Ending cost not ending. Cost of goods sold for buttercream was 234,000 and for condensed milk it was 729. Ano yung posibleng question nila sa inyo? What is the cost? What is the gross margin for buttercream? What is the gross margin for condensed milk? What is the total gross margin? What is the net realizable value at split of 800,000? How much is the production cost per gallon for condensed milk? 16.1. Kung malupit-lupit pa na yung paghihiwalay-hiwalayin niya pa, yung kailangan mo i-compute lahat. What is the gross margin for buttercream? 66. What is the total gross margin for both buttermilk and condensed milk? It was 327,000. What is the gross margin percentage for condensed milk? It was 26.4. So i-anticipate kung ano yung pwedeng maging questions, which is why, if you remember in our previous discussion, I think I mentioned na when I encounter essay questions or yung sa multiple choice questions at medyo mahaba-haba yung given, what works for me is that I will move forward doon sa kanyang question. Kasi when you're able to determine what is being required of you, then habang binabasa mo yung problem, you're able to pick out which data, which information is relevant doon sa iyong pagsagot. That works for me. So, whichever, it would work for me. Basta ang mahalaga is that you're able to, you are able to answer. Tsaka alam mo yung dapat mong method na gagawin. Again, for problems on byproduct and joint cost, kailangan sabihin niyo sa'yo yung method na gagamitin. Hindi pwedeng mahulaan yun, hindi pwedeng silent. Yan. Medyo matrabaho lang, but tsagain. And before we continue with constant gross margin and RV method, it's important time. I think we need to have at least a 10-minute break upang stretch ng konti. Please come back at 8:24. We will continue from slide 71.